What is going on, my friends? YouTube live stream lags by about 10 seconds. Is that normal? She walked out, babe. You got her? Yeah. Don't. Yeah, protect that baby. All right, y'all. What's up, y'all? Let's go. Okay, let's see what we're doing for today. So silver. So I posted this earlier. So whenever you start seeing bounces, you want to see if there's anything that it's respecting from a previous low. So I put this in chat where this green bar wasn't here. It was just this red bar and then this red bar that created this nice 3-touch trend. And then on the 4th touch here, we just ripped and broke out of this area right here. So I want to see what happens as we come back down to here. And it's very possible that we are trading in, we are going to trade in this. Up and down before we make the next move back up. So one more move down, hold, and then a breakaway to the upside. Because if you see here, we have a very nice move up. Now we have to have some sort of pattern, continuation pattern or reversal pattern. We've already created the bottom part of it, right? We've already had 3 or 4 touches here on the downside. So we already have a support on the pattern. And then the question is now, does this become the resistance? This candle has to complete. So it's got 22 minutes. The candle doesn't mean anything until it closes on whatever time frame you're on. Because this can come all the way up and it closes. I don't think that's going to happen in the next 22 minutes. So I do think that this is what we're going to be trading in for a little bit. So that's silver. This is a good short area. If you look here, we have this area right here that's been a consistent resistance. And then you also have this trend. I thought I saw it earlier. Let me go to the 1 minute. Hold on. Oh, maybe I didn't see it. So this, I think we're not going to have any breakouts for a little bit. I think we're going to play in some sort of larger time frame channel or pattern until we make the move in a different direction. So I wouldn't be holding any trades with this unless we break. Like if we break this to the upside, and then hold over here over this, then I would probably hold a trade up for an extension up to 87.5-ish. But as of right now, this looks like we're just gonna go back and forth in this pattern. Maybe hold right here. So 1 minute. So we'll wait here. I just had a short here from this wick down, and then it was a good trade. It was like $2,000 trade. It's crazy how much money you can make off just like 6 micros. But then also crazy that you get, like, if it goes against you by even like a quarter, like a 1/50th of a dollar, like you're down, $400 or $500 right away. So you have to be very, like, you got to try to time your entries better. So let's look at NQ. So right here we have a trend which did not respect. This is when we broke out of it right here. Let's see if a volume profile gives us any decent levels to look at on the hourly here. So volume profile can help us with looking at support zones that we may not see. So in this area, this right here, remember we have the cliffs, and then this down here are the dominant volume based resistance and support levels. So remember, I've told you guys, if we're in this type of area, then we can very much range. Like this could just be a range, an hourly range. We want to go down to a little bit smaller time frame to see if there's any micro supports here. Right here, that's a good support. So that's on the 30-minute. Let's go to the 5-minute. Right here where we bounced, and then right here. These are the two levels we have to hold, otherwise we're going to continue to move. So if this breaks, we're going to go down to here. If this breaks, we're going to go down to here. And if this breaks, we could probably revert back to this area right here, but the volume here is not even that high. So pretty low volume. And so the way you use volume profile is you look for where are the areas where you have heavy orders, right? And so what this is telling you, volume profile, is over this period of time, which area had the heaviest amount of orders, and those are typically supply and demand zones. That's where the big positions are being taken. So you always look at those levels to be defended, and then when you're using something like volume profile, you want to look for areas where we have volume gaps. So these areas like this there's no volume really here. This was just a price separation, an algo price separation, and there's not a lot of volume traded here. So more than likely, if this breaks into this, it's going to do the exact same thing it did when it went up. It's going to come straight down back into this level right here, which is showing as our volume profile level. And it's usually the locations where you see more of the like distribution and accumulation are within these areas, if there's two or three of them. So it's just cool if you can't really see. It's cool for two things. First thing is it's cool for your price discovery, like silver, for example. It's nice to see where the levels are of volume, and so that way you can try to pinpoint some support levels. But if you go to, for example, the 4-hour, this gives us our areas of consolidation on the large time frame right here. Right here, this is a more micro level right here, and then the areas where you have this, where you have very low volume being traded, those are just expansion areas. So once you break into it, there's a very low likelihood that it's going to go back into that. It's moving now into the next area of whatever it wants to do, accumulate, distribute, whatever it's doing. And again, remember, this is a large time frame. So down here, we've been in, if you think about it, we have been in this range, which seems like if on the shorter time frame, it's not a range, but on the large time frame, it's a range, right? Because look, we've just been hanging out in this area. But on a small time frame, it seems like it's big because we have, 1,000-point swings, 600, 800-point swings. So any questions on a volume profile? Any questions? Babe, let me know we need a towel. Right now? All right, hold on one sec. I gotta get the towel. 1 second. Okay, I'm back. Okay, so let's take a look now and start analyzing the shorter time frame on MQ and see where we may want to take some trades. So real levels right here from a volume profile perspective, this is a good support. So this would be an area I'd look for to take a trade. This area right here again right here, this area, we have a possible creation of a trend support here. Now what will happen is we need to see what happens when we come here. If it's a third bounce and it holds and then we break back into one of these areas here, then now it's a valid support trend, and now we have to now assume that we could probably do a channel here like this, right? Come down, then we go back up, etc., etc. So again, these are all theses. We're looking at a few different things that can happen, so that way we're prepared depending on what happens. But we want to look for key things to happen to tell us more of our story, right? We're just filling a story, and sometimes the story is not obvious, and you've just got to look for the things that would tell you that it's becoming more obvious, right? Trades aren't always obvious. Sometimes they're just doing things. So if you look at a fib level, let's take a look at the fib level here. As that is a start, we haven't bounced anywhere. Let's see, as this is the start. This is the start, we haven't bounced anywhere. So not really respecting any fib levels either. So the only thing I see here is just this trend that's been broken. We have not retested it yet. So that's a possible bounce. Maybe it will go sideways, break down, and we'll hit it right here. So this is a trade I would take for a long right here. Every trend needs to be retested. And if it's not retested right away after the breakout, it will be retested again on the move down, and it will hold. It will hold. So I always leave these trends on my chart, because when it gets retested, I want to be ready. So we could go over here a little bit, then break down, hit this area right here, right around 740. That's where I would take a long position, is right here. If it perfectly aligns with these two, then that's two confluence layers. Then if I start seeing some divergence from an indicator perspective, that's three confluence layers. Then if I see a big candle, like a hammer or something there with the extreme volume, that's the fourth layer of confluence there. So right now I'm at 2 layers of confluence based on a price location, right? This is location-based trading, all right? Location-based trading is you find the area that the layers are basically telling you to go to, and you're waiting to see what happens there. And as they start stacking up, then you're like, this is the trade. And I do that pretty often. If you guys see all the time, I put in chat like, hey, we got heavy divergence here. This is the behavior, looks like it's going down, etc. I'm not explaining it, but that's exactly what I'm doing in my mind. I'm doing this kind of an equation where every layer has to tell me the same thing, and that equals the more layers within the equation, then the higher the success rate. So once I get to like 4 layers, I'm like, hey, this is the trade. Take it. Like that's the stuff I put in chat. Now, do I take trades in between there? Absolutely. Like, do I take two layer trades because I just want to scalp and I feel confident? Yeah, fuck yeah, I do. What am I? You know, I like to have fun. But I would never tell you guys ever that there's an area I'm taking a position in, and it was not at least a 4-layer trade where 4 things are aligning for me. And one of the things is candle behavior. Candle behavior shifts dramatically when you move into these areas, and a lot of people don't realize it because they take their trades too early, and then they're stuck in their trades and they're freaking out, and so they can't really recognize the behavior of what's happening. So it's pretty interesting. Hey man, I'm going to annoy you with no divergence questions. Obvious and QES had one of those kind of days with a relentless drift up. I noticed honestly diverges over and over. How do you decipher when you ignore? So I shared this earlier. So divergence will always work. It will always work. But if it's not at a key level, I don't expect a larger move. So if you're looking just at, so for example here, I think this is what you're saying, right? So we had divergence here, and then we ripped up. Then we had divergence here, and then we ripped up. And then we had divergence here, and then we ripped up. And then we had our final divergence here, which is where I had this aligned with our key levels, and this was the short area for me. And then we had another divergence. So first off, nice job with watching divergences because it's important, but it can't, two things. First thing is that you can't always expect a full reversal. There's no indicator that will tell you the market's going to completely reverse. There's nothing. There's absolutely nothing. So you have to take every position as a opportunity for you to take money out of the market, and then watch for supports to hold. If supports start holding and you start seeing price behavior change, candle behavior change, then you get out of the trade. You don't feel comfortable anymore. So it's use it as a tool to get better entries, but do not use it as a tool to try to tell you that the market's going to now completely reverse and dump. Some days it will. Some days it'll just give you, 10, 20 points. Some days it'll give you 100, 150 points. But you never know. The main thing is you're using this to time your entries and to feel confident that the market needs to reset, that momentum needs to reset. That's the main thing. Because every single time this happened, you could have taken a short for 50 points, 30 points, 30 points. But you have to wait for 1, 2, 3. So one peak, 2 peak, 3 peak. I would have taken that, dropped it. As we move back into these areas that were support that were broken, I'd probably trail and get out here. Breaks the high. Now I'm waiting for 1 again. Now 2 happens. And then we have another move up that breaks that high. 3 happens. Now we get the same thing. Then you take the trade down. Right? Now again, you take profits. If it breaks back up, you trail. You get out here. You get less profits, but you're still pulling money out of the market. It breaks again. Now you're waiting for 1 peak, 2 peak, and then a third try. Big shift, and then another drop. And then if you're doing on this on the 5 minutes, it's literally every single time it's happening. Every single time. Every peak. So what you want to do though is that if you don't want to get faked out, wait until it's at a key level before you do that. So for example, let me remove this real quick. Okay. So I think we all agreed that this was a key level area right here. Okay. I think we all agreed to that. So as we move into this area, are we seeing other indications that it is exhaustion and it is exhausting? Are we seeing anything else like that? So if like right here, for example, this one actually would have been a decent trade because we went into this price gap area and then we diverged and then we moved down a little bit. That's a good trade. Even though you don't get like a full reversal, this was a good setup. You see price moving into this area, then on the smaller time frame, you start looking at divergences, right? Price moves into this area right here. You see your first divergence, you see your second divergence, you see your third divergence in this area, and then you take a short here, 925. You let it go. You get down to that's 70, 80. That's 70, 80 points. That's a good trade. Like, even if it didn't reverse, that was the very first time in the day that happened, and it was in this key pocket right here, which we always trade on the higher time frame. So that was a very good trade. But yeah, so don't just use the indicator, any indicator by itself as a source of truth. It's only one layer. It's only telling you one thing, and you're gonna see more confidence and more confirmation as you wait for some of your key levels for it to approach to. Right? So maybe I wouldn't have traded right here because there's nothing really here on the smaller time frame that makes me happy to trade right here, this area. I would have waited for the high. And then once we got to the high, I would have looked for our divergences. And then as we peaked, I seen, okay, wow, this is a big divergence in comparison to this. This is where I want to take my short. So just make sure that you're aligning your layers. Okay, layer one is trend. Layer one is trend. I always look at trend first because I want to see where are we breaking, where are we pulling back to, how can I draw levels? Is there a level that we need to retest? Right? So for example here, this is a trend that was broken and we have not retested it yet. We have not retested it yet. Okay, this is an area I want to hold, and if this lines up perfectly with this area right here, if by 10 p.m. in 2 hours we drop here, 10 hours we drop here, I will take this trade. There's no doubt. And then if I see RSI diverging or any indicator diverging in this area, oh my God, that's 3 layers. Layer 1, layer 2, layer 3, and then if I draw a fib extension, so for example, depending on where this goes, and depending on where the trend started, so the trend may have started right here. No, I like this top. So let's say we push back up to this area right here, 38.2. This is just example, by the way. And then we go like this. Does this line up with the purple? Oh, wow. Interesting. So if by thesis, if by thesis, right now we're moving up. If we break over this area, right here, we get here where we have this previous support, right here, trend resistance. We hold this and we extend down. Our 100% extension lines up perfectly. Now I have 3 sets of confluence here without even being there. Then once it gets there, all I'm looking for is a little bit of divergence. All I'm looking for when I get there is a little bit of divergence. Then I have my 4th layer. Then it's game time. Then it's time to go. It's time to take the trade. So that's why playing, instead of trying to predict what's going to happen right now, it's more fun to try to figure out where it's going to go next. Like, draw your levels, look at what needs to hit, make your predictions, set key areas, have fun with it. This right now looks like and it's going to drop right there. Or it also looks like it could be a bear flag. If you draw this parallel channel and this parallel channel that lines up with this area right here, this could be a bear flag. You draw this level and the 3rd touch of the bear flag, which lines up perfectly. So this is another bit of confluence. If this holds as a bear flag, you have 3 different layers of confidence here. You have the Fibonacci retracement level. You have a previous support turn resistance level right here that's going to be retested. You have a full parallel channel bear flag where you have perfect touches on the upside and the low side. And they all line up perfectly with this 38% fib retracement level. That's a good, like, if this touches here, I'd probably take this short. So this is what I'm watching for right now. I want this to come back here and I will take this short. There's 3 layers here, and then if I start seeing divergence here, the 4th layer, I'm taking that short. And I'll tell you guys I'm taking it. That's it. Things just have to align. And so that's why it's important for you to diversify your knowledge. It's not because you want to use different indicators or you have different strategies. That's all fine. You can do all of that stuff. But you've got to be able to look at a chart and figure out which areas are your indicators going to matter. My indicator is RSI. RSI is my indicator I use. It's what I use. That's it. But I have to understand time. I have to understand trend. I have to understand supply and demand. I have to understand location. I have to understand momentum. Like, you've got to understand all 5 of these things, and they're all completely different. And when you learn them and they start lining up for you, it will change everything. You take the trade and you just know so much that it's going to work out that you just step away. You don't even care. You don't even care what it does. You get 10-point slippage, it doesn't bother you. Because you know that is the right position. 1 layer, we don't take the trade. 2 layers tells us we've got to look deeper. 3 layers says, okay, we can take this, but we got to manage risk. 4 layers is, okay, I can go up a little in size a little bit here. This is a good spot. 5 layers is, I'm going heavy size. This is my position, and I'm taking this, and I might hold this because this is a spot I've been waiting for. And you typically see the 5 layered ones on the larger time frames at key levels where lots of things are lining up perfectly there. So again, just make sure it's not about changing your strategy. Your strategy can be the same, but it's about look for areas to implement your strategy. That's the main thing. Use your strategy, but wait for these areas to implement them. Don't just stare at the chart all day and look for your, like, it's when we're in a ranging market, your strategy doesn't work. Most people's strategy doesn't work in a ranging market. Most people's strategies only work when there's momentum to one side or the other. Well, that's not a great, that's, 50, 60%, sometimes 10% of weeks. So you've got to be able to just find locations that you feel comfortable trading in and then look for your strategy to play out within those areas. Now you have an advantage. Now it doesn't matter where price goes. You're never going to miss out because it's always going to go somewhere that you want it to go to. Can you identify how you identified the purple zones? So purple zones for me are typically, so there's 3 different areas for me that I'll draw purple zones. First one is the obvious one. So for example, if you go to the 1 hour, anywhere like this where we have, this is very elementary, but anywhere like this where we have multiple wicks from a support and resistance side, this is my purple level for sure. This is an area that has consistently held as a supply and or demand zone. So I'm drawing it because I want to see price magnetize to this and then what happens when price comes through again. So that's the first area I look for. Second area I look for price displacement. And I typically like to do this more on the higher time frame. I don't like to do it on the lower time frame. So 4 hours, always pretty good. So I look for levels like this. Areas like this. And the reason being is because not only did price move with high momentum out of this area and create a new trend, when it came back, everybody agreed on a higher price than when it first separated. So this area here tends to be an area that once retested will hold for at least one time. At least one time. Right? Here's the one time here. At least one time. So these are areas I also look at too. Secondary areas I look at are areas like this. And these are more smaller time frame areas, because you don't see them as much on the larger time frames. They tend to happen in single candles. Areas like this. Areas like this. These are high distribution, high accumulation areas where you have much more volume being transacted within this area than you did this entire move sometimes. So these areas become heavy when it comes to a support and a resistance area. So when I see areas like this, I will always highlight them as well. So those are the 3 different areas that I highlight. But again, I'm not always going to highlight them. I'm looking at my larger time frame areas. I'm looking for what the chart is going to tell me which area I'm looking for and where I need to highlight. Those are the things that I'm looking for. But those are the 3 areas like that. Let me find a better example for areas like that. So this area right here, for example, what we're doing right now, this area right here is an area I would highlight. This is an area I'd highlight because if you break below, this is going to hold as some sort of support trend resistance area here if we break down below. So this is an area I would hold, and I would see how price reacts within that area. Anywhere I see significant consolidation, yeah, this goes on the YouTube and you can watch it anytime. So look at those areas. I am trying to put this all together in a workbook kind of like a training manual, if you want to call it, where I go over the layers, each layer, I go over what each layer can show. And then I go over how to use the layers in order, but I'm trying to figure out how to build the examples. That's the hardest part, because nobody wants a training manual that doesn't, that's just words. Like, it's got to be like stuff that's easy to learn. Like, you just look at it. Like, for example, like, hey, chart this area of where is, where did the trend break through, and where does it need to retest? And then you have to point where it needs to retest. And then on that same picture, it says now layer 2. Now draw where you see a price, supply, and demand zone on the chart. Then you draw the price, supply, and demand zone. Then it says, okay, now as price is moving into this area, show us where, you've seen RSI divergence, and then you mark it where you see. So it's kind of, I just want to train people to go 1 step, 2 step, 3 step, 4 step, 5 step. Like, I want them to, when they see something, I want them to answer the question, and I want them to ask themselves another question. And I want it to be like an autopilot of 5 things that they do in a row, right? Is it respecting a retracement level? So NQ on the 15-minute. So yeah, this area right here, I would highlight 100%, because keep in mind, if we break now, if we break to the downside, we're going to create, like right now, if we just break down, we're going to create price displacement. Then those price displacement areas become our support and our resistance areas. So it all aligns. We just don't see it until after it happens. Right? This has to displace price either to the upside or the downside. This is not like, it's a high likelihood. We're either going to get a big bar up, come here, and then we're going to have price displacement here, or we're going to get a move down and we'll have price displacement here, and it's going to be the same level after the fact that we come back to, and then we look at retesting. But the longer the consolidation before the breakaway, the stronger the level. So I want you to keep that in mind. Sometimes we'll see it happen quickly, like here, for example. Like this was very quick. This like sideways. This area is stronger here, not stronger here, right? But this area right now, where we have this channel of consolidation, this area actually is it becomes quite strong, and this entire area becomes something I want to watch. And that's just things that, over time I've just noticed. So you see how this trend hasn't been, actually it has been retested. So this trend was retested right here. So we'll see if this holds this trend if we move back up. But I really think we're going down. I think that we are going to create a downtrend. And I do think that we will see this area right here. And right now, as you can see, we're creating this ascending support here. And we keep magnetizing back to this area. So this is what it looks like is going to happen. Something like that. So we'll see. So let's go back to silver. That was a decent short there on silver. So yeah, so silver's now created this kind of channel here. So we'll see how it reacts here. So right now I'd be looking for divergence at this trend line. So as we move up to this trend line, looks like we broke this trend. Oh no, we didn't. We held this trend. Okay. See, that would have been a good long right on this trend. So what I want to watch for now is how we react as we get up to here. Is this also aligning with a retracement level? So yeah, so this was a nice play too here. Trend, 38.2% retracement. Not really good divergence, but I wouldn't go off of that. So I may not have taken the trade actually. Do you see here how we had some divergence here? As we boom boom boom, with a nice little reversal. All right. This thing looks like it's getting primed to squeeze up here. So we have a trend retest right here, right where we're at right now. Remember, anytime it tests for the first time, it must hold. That is the law. We have a trend here. We broke through it with high volume. Now this trend must be retested. That was a really... Now we'll see what if this right here breaks, we could be coming straight back down. Should have taken that. I would have taken that trade, 100%. I love me some trend retests. But let's see what happens here. Are you guys, anybody in any trades right now? Anybody trading anything? Yeah, for sure. 100%. We may dump here, you guys. We may take a poo-poo. It's very possible. But I'm not going to take it. I'm just making a guess. We just have one thing that's lined up for me here. Nothing else is really lined up. I just love trend retests. But for us to break out of this, it needs to be a high volume bar. It's not going to be a low volume bar. So, and then we have another high volume area right here that we need to break out of. So the risk for me is not worth the reward at all. Unless I literally put a stop right outside of here, but we need some more things to line up for us to take the trade. It's okay. There'll be another opportunity. So gold is moving a little bit better. Let's look at the retracement level on gold. What level do we want to trade? We're almost there on gold, so good area right here. We have our initial price separation that we already filled. Where's our trend? Already broke through it. So I'd look for a gold short right around here, 46.12. I'd be looking for divergence. See if we can get a extension on this trend break retracement. See how we held the retest right here. So this is the area I'm going to look for some divergences, right around 46.12. And do we have any trend retests in that area as well too? I think that's going to be an important piece. This area right here. That's a little bit higher. We'll leave that there. Bless you. Yeah, so we keep holding this. I like to see us just go sideways a little bit. Come and test this level right around 46.13. This is an area I'd like to see us short again at. So we'll leave that on there. This one I don't feel like is necessary. Is this thing gonna squeeze? Or is it there, or was that the level? Sometimes I can't see. I don't know, man. You see that divergence? That's the second candle, weaker than the first push. It's just not in an area that I would normally trade. I don't really see anything other than this. What a boring afternoon. So, all right, y'all. Well, I'm gonna call it. I'm sitting here trying to figure out these little areas. It's not doing anything for me. We got to get some volume and some movement. I think that's important. So, I will see you guys for market open right around 9-ish. Eastern time. So take care, everybody.